session is dedicated to Bitcoin. Please join me and let's sit in the order of the banner. So Paolo, next to me.
Nice.
Dan Demelza. Demelza, we know you already, but we don't know Dan. As in, who doesn't know Dan? So please introduce yourself, Dan, and Paolo in a few sentences, and then we can dive in.
Well, thank you so much for having me. Switzerland's a beautiful country, so glad to be here. And my background, I've been in the Bitcoin space for about 10 years. My most recent corporate gig was head of marketing at Kraken, and I've done a lot of Bitcoin education. So I've got quite a few followers on YouTube, Twitter, LinkedIn, and I've helped a lot of people come to understand and appreciate Bitcoin.
Thanks so much. Paolo?
Yeah, welcome everyone. Thanks for being here. My name is Paolo Guarnerio. I'm responsible for business development as SDX. SDX is part of the SIX group, one of the biggest FMI in Switzerland, and we run like a digital exchange for digital security. And recently we have launched also our Web3 unit, where we basically provide technical infrastructure for banks and regulated financial institutions to access digital assets and cryptocurrency.
Thanks so much. The reason why we have this panel, because Paolo pointed out last year that, Emi, you don't have much Bitcoin content here. So we correct this year, and we dedicate half an hour to Bitcoin. What do you guys think about Demelza's presentation? When we reach mass adoption of Bitcoin, how does that going to look like? Will there be layer 2s, layer 3s? When do we get there?
Well, I liked a few of the points she brought up. I think really well done presentation, by the way. Volatility, as Bitcoin becomes more widely adopted and there are more and more hodlers and the market becomes deeper and deeper in terms of liquidity and the market capitalization grows, eventually Bitcoin will become boring, right? It is supposed to become a gold 2.0-esque asset, and all of our grandparents always tell us to go buy gold, and we're like, okay, grandma, grandpa, that's a little boring and that's not an exciting investment. Bitcoin ultimately is supposed to be a safe haven gold 2.0 asset. So at its maturity, it should be low volatility. So I think that changes a lot of how people perceive Bitcoin today. I think Bitcoin today is perceived as a higher beta tech stock by a lot of people. It's perceived as a very speculative store of value. So I think, when we look at Bitcoin's kind of final frontier at that more, low volatility moment, that's when Bitcoin kind of blossoms into becoming, the medium of exchange and unit of account style currency.
Yeah, I agree. I mean, the presentation was great, very interesting. I think it's not a matter if Bitcoin will be base money. I think the question is when. And I think here we have like unique assets, probably the most powerful assets that human beings ever had the opportunity to use, which is that has no issuer, can be transferred everywhere in the world in a matter of minutes. It can be verified at any time by everyone with low requirement, and it's scarce. And we start to see individuals, corporate, and I think it's just a matter of time when we will see also central banks wanted to have Bitcoin on their balance sheet. I think next year are going to be very, very exciting.
So how will mass adoption affect block size? When it comes to block size, what is your take, Demelza, Dan? What do you guys think?
You want to go first? You want me to go?
Yeah, I'll let you go first. That's a hard one.
So in the block size wars, we had an intense debate over what is an appropriate block size in L1, which, it's essentially a fixed parcel of land, and there's only so many transactions that can occur within that fixed parcel, and depending on the type of transaction, because it's the fee structure is based in bytes. Essentially any rise in demand for that fixed amount of block space will lead to a rise in fees. And so there was, the block size wars outcome for the Bitcoin network was the idea that Bitcoin would scale that lower value or lower economically dense transactions would occur on L2 and L3s, or layers above Bitcoin, and eventually they would settle the net value on L1. Lightning's a prime example of that. You can open and close a Lightning channel with 2 transaction fees, or 2 transactions and corresponding transaction fees. And you can have millions of transactions occur through a Bitcoin Lightning channel that's open, but only the net value settles on chain. So that's an example of how this would work. And so there is a ethical and kind of philosophical argument, though, of accessibility. Who should be able to access layer 1? If you keep increasing the block size on layer 1 to be able to include more transactions, which would bring the layer 1 transaction fee down, then you increase the node operator costs to run and to be able to connect to the Bitcoin network directly, aka decentralization. So there was an intense debate as to how Bitcoin should scale the Bitcoin network, and most blockchains have agreed that scaling should occur in layers versus everything happening on L1. I think it's widely recognized that scaling in layers is the more advantageous technical way to do this. However, that does mean that layer 1 will be inaccessible to lower income folks over time just due to the high transaction fee costs. But this is something that the Bitcoin network has, as a community, has agreed upon. Also the Ethereum community as well. Ethereum gas fees are quite high and will only get higher in the future. So this is something that we've all agreed upon is the right way to scale, but it certainly prices out lower income folks who might be in the global south, South America, Africa, etc.
When we prepped Demelza, you said that Michael Saylor's take when transaction fees can reach as high as 600K is somewhat realistic, or not? Like, what's your take here?
Yeah, I think Michael Saylor has a great point. He's saying that, right now actually fees are quite low for a base layer money. Like to have final settlement on the Bitcoin network, and fees are as affordable as they are. So, he's making the argument that we should be, stacking sats kind of now while fees are low, because eventually fees on chain, he argues, will be 600,000, in that range. So, forecasting this out, I do agree that, scaling in layers, having fiduciary media, or even like, Lightning Network or Liquid, which are kind of not quite fiduciary media, but then possibly something like Fediment, like I've been watching that recently. And yeah, so I think there's a lot of opportunities to scale with various products, but the final settlement probably will have a high fee. I don't see a way around that.
And if I were to add one more thing too, if we look at other large asset transfers, wires, home purchases, homes are considered the most widely recognized store of value asset, even more so than gold. Real estate's a $250 trillion market, and one of the oldest asset classes to ever exist, even before gold. If you look at in physical gold delivery, if we look at also foreign bank account creation, if we look at, and that's created in order to then wire money to that offshore bank. If we look at the transaction fees that are incurred doing those activities, they're not really that price sensitive to transactions that cost thousands of dollars to complete. So I don't think that people will have any qualms paying hundreds or maybe 600,000 is a lot per transaction. It depends on, it's a complex conversation around a security model in terms of what's the appropriate level of security spend, which I don't think we want to go down that rabbit hole. But yes, people are willing to pay much higher transaction fees than right now. I think where people had conflict and where the conflict occurred in 2017 and now are people telling low-income folks that Bitcoin L1 is appropriate for them. Mm-hmm. It's not true. It's the uncomfortable truth, but it's the truth that all blockchains have sort of agreed upon as a necessary evil.
And by the way, this is something which was clear from the early beginning. I remember, recently I saw a post from Hal Finney, which was actually the first person after Satoshi to use Bitcoin, and he clearly said that. He said, block size is going to be a limitation, and we need to have layer 2 to be able to transact easily on Bitcoin. So it was clear from the beginning, and the fact that in Bitcoin we have two scarce things. One are the number of Bitcoin, and the second thing is the block size. And there is a clear reasons then explain why we have this limit on the size of the block. And it's critical also to have decentralization, of course, is an important aspect, but also to have a clear rule and to make mining, which is actually the way that we secure the blockchain, profitable. So I think, I mean, we will talk about Ordinals, but I think that's...
we talk first about Lightning.
Yeah.
Finish your talk to us in...
That layer 2 development will be essential to actually allow normal people to transact even with low amounts transaction.
And can we expand on the layers right now, or are you going to ask a question here in a minute on that?
So I was about to transition to Lightning.
Okay, perfect.
And come up with a few use cases. And yeah, why are you excited about Lightning? If you are, I don't know, Demelza, how excited you are.
Well, I am. Okay, so I think Lightning, for me, it's still a little bit difficult to use. Like, I got the Phoenix wallet, and I've seen do a couple transactions here and there, but I'm still not like, I wouldn't say proficient in the Lightning network. But in terms of use cases, I see it being great for like spam reduction. So basically, with Nostra, you can charge people a small fee before they can post information. So for example, like on Twitter with all these bots that, astroturf someone when you post something that they don't like. With Nostra, if you just pay like a little Lightning fee, you can stop a lot of this spam from occurring in the first place. Plus, you actually, people that do want to attack you, they're going to have to exhaust substantial resources, to facilitate this attack. So I think that Lightning Network, because it facilitates micropayments, it really can be integrated into a lot of the different, apps that we use. And it's just a matter of time before entrepreneurs kind of come into the space for various use cases.
I'm obviously bullish on Lightning. Lightning is a great scaling tech. I don't think it's a general purpose fit for everything, and I think it was treated like that by a lot of the Bitcoin community of, how do we fix scaling? Lightning. Lightning's the most popular layer 2 right now, but we've got side chains that are pretty old, like Rootstock, Liquid. When we look at the opening and closing, so if you want to have a non-custodial Lightning wallet, if those on-chain transaction fees are high, that still prices out a lot of like the global south. So their first access might actually be more in the form of side chains, like Liquid or Rootstock. So I'm more layer agnostic. I think there's a lot of different ways to scale Bitcoin. Lightning is exciting. I welcome it. I'm loving seeing all the different applications and companies built on top of it, but I do think we have sort of neglected the other ways to scale Bitcoin, and there's a lot of really cool, exciting things coming out, not just side chains, but drive chains and all sorts of other ways to scale Bitcoin. So I welcome all the different types of layers.
Paolo, what's your favorite application on Lightning? And yeah, of course, we want to hear your take as well.
Well, I have a lot of favorite applications. Well, look, I think Lightning, it's probably the most used layer 2 application. There are other coming. I mean, RGB is something very, very interesting that we will hear more and more often in the future. And I think the use case of Lightning is very interesting because it allows everyone to send tiny amounts of money, like small percentage of a cent with almost instant settlement. And I was reading recently an interview from one of the main developers of Lightning, and he was saying, I see actually Lightning being integrated in social media, in TikTok, in Facebook, and ideally, instead of putting a like on a post, I can send some Satoshi to actually, and create like new way for content creator to monetize their content without relying on an intermediary. So it's maybe I think something that it will be challenging in the future is really to create standard for Lightning and second layer. And this is something that, for example, LBP is an association here in Switzerland is actually trying to do, because that will actually allow more application and more developer to actually build on Lightning.
I hope that was not too layered of an answer for your Lightning question.
Yeah, if you guys want to tell me that like Rootstock is more popular, as in not popular, but also widely used or somewhat used, I think the best applications as in Nostr or the ones which we talk about, the one which is used in Africa and South America, where you can send Satoshis. I can't recollect now the name of that one, but yeah, certain companies are using Lightning to send fiat. So let's talk about Ordinals, because I know the level of enthusiasm towards Ordinals here differs. I think your Twitter picture is a wizard.
It's a wizard, yes, a Taproot wizard. A Taproot wizard is a Bitcoin NFT project that is powered and able to be created through Ordinals. Without getting too technical with how Ordinals work, basically Ordinals and a layperson's knowledge here, an Ordinal allows you to put graphic assets, music, or other code on the Bitcoin blockchain, and then you can interact with that code. You can interact with that data. I think it's the easiest way to summarize what Ordinals do, because Ordinals also support BRC20 tokens, which are the ability to create tokens and issue them on the Bitcoin base layer. By the way, Ordinals exist on Bitcoin base layer, layer 1. And so Ordinals, I think, represent probably the largest amount of enthusiasm I've ever seen in the Bitcoin community since, I don't know when. It's been forever. What's interesting is that the hardcore Bitcoiners themselves aren't that interested, but the enthusiasm is drawing in are people from Solana, Ethereum, and all these other chains, because Bitcoin's like Coca-Cola. People want to go build on the original chain if they can. Bitcoin just didn't have some of this functionality, nor was the attention focused on Bitcoin. So Ordinals to me represent probably the biggest change in the blockchain and crypto ecosystem in a long time. And I think a lot of people are sleeping on this. I think that this allows NFTs on Bitcoin, and these NFTs exist on chain too. These aren't pointing to an IPFS file like on Ethereum. So you actually have the graphic asset that will persist through time. And many other things that we can't even fathom right now. Ordinals are a very kind of new developer. There's a bunch of new developer enthusiasm for it, but Ordinals are quite new, about 5-6 months old. So we don't even know what will blossom from this over the next 6, 12, 18 months.
Completely. I think with Ordinals, again, like Michael Saylor, I don't want to quote him too much, but I think I have to agree with him here. He said he doesn't, let's say, endorse it, but he doesn't censor it, because we don't know who's going to build the next best app in the world with encryptions on Bitcoin's main chain. So this is it's generated a lot of entrepreneurial excitement as well. And I think like the wider question for me is someone that's like, I'm Bitcoin first, I'm not Bitcoin only. But for me, the question is kind of like, is this going to pull DeFi over to Bitcoin? Because DeFi is like, right now it's on all these other coins, but if RGB and Stacks and all these people start to really build, is it going to attract a lot more of that market to Bitcoin? And so I'm excited for that possibility, but then that would really change the investment thesis for that would change the entire for all the investors that have use cases that can't be done on Bitcoin right now. I think that would definitely change the structure of the market. So Yeah, I'm trying to really keep up with the developers and what they're doing on Bitcoin. It's exciting, and if they make a lot of breakthrough, it could challenge Ethereum. Yeah.
Yeah.
And there's pros and cons. Like Bitcoin can't do everything Ethereum can, and Ethereum can't have some of the function that Bitcoin does, right? And I think when you look at the value to be unlocked through Bitcoin DeFi, Bitcoin's market capitalization is 2.5 times Ethereum. That's a bunch of capital sitting there waiting to be used in a lending, borrowing, yield farming, NFT, all sorts of these other activities. So this is the biggest opportunity in all of crypto. And that's where I think a lot of people are sleeping on it, like I mentioned before. Some people may ask, well, what is the utility? So you create these different DeFi applications. What does this functionally do? From my experience as a marketer, what I've noticed is that, and I think this is quite objective and hard to disagree with, most adoption has occurred in the speculative bull runs, 13, 17, 2021. Most of us came for the speculation. You know, we're humans after all. It's a little bit harder to get someone interested in Bitcoin when you sit them down and you bring them through a very libertarian, conversation around gold and the Fed. It's pretty boring. But your buddy tells you to buy Bitcoin because it's going to go up. That's how most people get in. Now, that's just how you acquire new Bitcoiners, is through the speculative cycles. But they stay for the sound money. Once they understand it, then they become a long-term hodler. What I noticed at NFT NYC in 2022 was that Ethereum holders, a lot of them are introduced to Ethereum through NFTs, yield farming, and other speculative games. When asked, do you understand the monetary policy or proof of stake? They said, I don't know what you're talking about. So it didn't really matter what the underlying fundamentals were because they were introduced. Again, a new user to that network was introduced to it through speculation. But coming off of my high horse, then I realized most Bitcoiners don't understand how Bitcoin works either. And we go to all these conferences and we talk to people very knowledgeable about Bitcoin, but the masses, most of them bought Bitcoin because their friend did. And because they're like, oh yeah, it's like a gold 2.0, but that's about it. They don't understand anything about proof of work, monetary policy, or anything else. So these DeFi speculative games introduce people to a protocol. And so Bitcoin, instead of just having one game, spot trading, will now have NFTs, yield farming, lending and borrowing, all the speculative games that Ethereum had in Solana. So this is why I care about it, is that these games will introduce people to Bitcoin, and lending and borrowing is a core basic function of any market. So it's exciting to see that develop on top of Bitcoin versus CeFi versions like BlockFi or Celsius or ones that failed.
Yeah, I mean, I think Ordinal raise again the question of are we ready for mass adoption? Because I think once we will reach the level of adoption that you showed before in your presentation, we need to be aware that transacting on chain will be extremely expensive. So I'm actually happy that Ordinals brought up that discussion again, that we need to improve our layer 2. We need to be more active. We cannot relying always on chain transaction. I mean, people have been putting different, media stuff, song, PDF on Bitcoin since day one, and
2009.
Yeah, I mean, exactly. I mean, Satoshi himself. So it's nothing new, right? I mean, you can actually download the Bitcoin white paper directly from the Bitcoin chain. I think, probably personally, I think Ordinal will evolve in something different. Probably on layer 2, because it will be extremely expensive to use on-chain transaction for Ordinals. But it's an open network. Everyone can do whatever he wants. We are actually playing with a technology that it's relatively new. I mean, it's exciting to see how people are using Bitcoin, and it cannot harm or cannot kill Bitcoin because we will face a situation where there will be much more pressure from governments to try to congest Bitcoin, trying to spam Bitcoin to make it unusable. So this is just a test, and so far so good.
Super. So real quick, because we are getting to the end, how do we win? How do we increase mass adoption? If you're living here and you're like not closing the door mildly, then I'll come and talk to you, because this is really, really annoying. You can't focus on the Bitcoin panel. So how do we win? How, do we always have to wait till the next halving?
Well, I think we are winning. To be honest, we are already winning. I think the adoption is increasing. I think more and more. I work with institutional clients. The demand is growing day by day. So I think we are on the right path.
I feel like I already won. So basically, people are living in a parallel society right now. There's like the Bitcoiners that have sound money, and that changes your entire incentive, like your preference, your time preference. Before, when you have money that gets debased every year, you just don't have an incentive to save for the future. So you don't make long-term decisions that rely on compounding interest, because you're not going to get that, right? You're going to lose money if you save money with fiat. So for me, I've been saving in Bitcoin for a decade now, since 2013, and it's given me, it's a cultural, it's not just financial, it's a mindset.
It's a revolutionary act.
Yeah, so
Dan had tweets.
There's people in this world now living amongst the fiat people that have the high time preference. We're living right next to each other, and I see people succeed that are doing long-term thinking, and so that's just going to continue on until that information gap closes and more people come to realize the benefits of sound money. But that's so I've already won. To bring on the rest of the community, we have to talk to people, we have to share it with our relatives, we have to teach them DCA on Relay app, we have to get them motivated about sound money, and then they will start for themselves this journey.
I think we've succeeded wildly beyond my expectations. We're from a similar era, where Bitcoin was $10, and there's about a dozen of us in San Francisco that were into it, and that was about it. I mean, I think Coinbase had raised like a 3 million seed round. The Bitcoin network is very fragile in that era. There wasn't a lot of liquidity. There wasn't a lot of content. I don't even think there were any YouTube videos back then. There was no newsletters. There was no CoinDesk, Cointelegraph. There was no crypto media. So to see where we were then, to see where we are now, I think Bitcoin has wildly, succeeded. It did not die. It's still the number one chain. It's extremely liquid, globally recognized by institutional investors across the world as a gold 2.0, including Bill Gross, some of the biggest minds on Wall Street, and others I can't remember off the top of my head, which is incredible considering we were 10 years ago considered lunatics, literally considered lunatics by family, friends, lovers, coworkers. Everyone thought we were nuts. So to see where we are now is incredible, with tens or hundreds of millions of people owning Bitcoin too. Bitcoin's narrative and network itself was able to survive and thrive. So I couldn't be more bullish, that the fact that Bitcoin's here today, succeeding this well. And if you think about the next cycle, Bitcoin doesn't move in linear movements, it moves in exponential ones. So I'm excited to bring the next billion on board into Bitcoin, which will be really, really cool to see. Cheers to that. We are less than a year away from the next halving. So thank you so much. Clap, clap, clap for the Bitcoin panel. Thank you.